Now, seriously, you can understand. I'm so sorry for today's MAO being so late. You can understand why, right, guys? I received so many messages from so many people with regards of what to do their portfolio right now because they are long in the market. And yesterday, the Dow Jones came down quite a fair bit. And the point is this, though, dear all. I mean, the thing is, if I basically gave you the call, I should be responsible to take care of you guys. That is the right way to do this. But the problem is that you guys take the views from other people, and then because this morning that other people is not available in the morning to inform you what to do next, and you come and text me and you get emotional. So not very fair. And the worst thing, of course, you didn't use the platform that we are using. So become free services. So you guys go to another trainer, another expert, and then get the view. And end of the day, y'all give the trades, and the big trades all go to the other side. And when things go strong, you come back to me. I just felt a little bit, the feeling itself. It doesn't feel good. But since you are family members, I still think that I should take responsibility to just help you as a friend, as a mentor. But maybe after this episode, we really need to think about it, right? Who is your real friend? Who is your real mentor? And who's the one basically helping you at the hour of need? Because it is very sad that end of the day, you don't appreciate, right? And then you do things that is, on surface. All right. So just my personal little sharing here. So okay, let's do the Hang Seng right now this morning. Hang Seng is going to start trading very, very soon. Let's just take Hang Seng right now. Hang Seng is going to open in about 30 seconds time. Now Hang Seng basically yesterday closes very near the MA level. So that means today Hang Seng might be trading even lower today. Hang Seng should be trading lower today. All right. So expect an initial knee-jerk effect at very open down. So Hang Seng going to open pretty soon. Let's take a look at Hang Seng right now. Hang Seng, here we go. Okay. All right, Hang Seng has opened. Hang Seng has opened. It has gapped down. Hang Seng has gapped down to 29,396. So that is a big jump on the Hang Seng. Now Hang Seng is basically trading below the OP and pivot 2 at the moment. So traders, I do suspect that there will be more selling later in the day. So traders for Hang Seng, just be very careful. All right, you don't want to be caught on the wrong side of the track. So traders, please be careful on this Hang Seng here itself. All right, for those who are involved in Hang Seng, just remember this, there is a few KCB at the area here. There's a few KCB at this area here, 29,333. So if the Hang Seng fails to goes down below there could be some artificial support around those areas. Okay, artificial support. All right, so traders, you can just take note of that. For today, for the Hang Seng, you can see now Hang Seng is staying very firmly at about this KCB level. Now, of course, Hang Seng, the chances of it going lower is there because of now we have a lot of problem on the 10-year yields, and also because of the what happening in US market right now. Okay, so today's MAO a little bit dry. I tell you that, a bit dry because a lot of technical stuff will be shared later on. So traders, just bear with me. Okay, just take note of that. Just bear with me. There's a lot of technical stuff that will be shared today. Technical means fundamental technical side. Okay, so just give me a short moment of time. I'm just basically doing a lot of what they call I'm basically multitasking at the same time. Okay, all right. So that is the Hang Seng for you guys. So traders, do me a little favor. Hang Seng today, if we basically stay below OP because this is pivot 2, right? So once the market continue to trade below OP, the market will go down. There is a high chance that the Hang Seng may test 29,085. All right, this is possible that Hang Seng may test 29,085 because what you're seeing right now is the market closing trading below the HSL, and also because that there are 3 KCB point, and these 3 are all fresh chocolate bar. So usually the market will like that. So traders, just be careful on that. Of course, that is on the point that there is no further recovery like on the Dow Jones. If the Dow Jones recover, the Hang Seng may have some recovery, but if the Dow Jones little pullback, right, you may see the whole thing coming down at a very alarming speed. Okay, so that is the Hang Seng for you guys. Okay. Okay, so let's just move down to our market today. Now, as I mentioned today, we have a lot of very dry fundamental to go through because this is what is actually ongoing. So you just bear with me, all right? Okay. Thank you, Chongming, for saying that statement itself. Yes, it's not very fair because end of the day, I don't make money out of this and I get all the headaches. And later on, when time is better, you'll go back to them yourself. Never mind, let's start this morning, 26th of February, 2021. Today is a Friday. Thank God it's Friday. So tomorrow is my preview, guys. If really, those who have been texting me this morning, I think the least way to pay it forward or return this favor is to actually contact friends to come for my preview. Now, that is only what I need to do, okay? I will share with your friends, okay, how to use a calculator to make money in the market. And hopefully they will remind you that what you're supposed to use. So that's why that is how we help each other. Maybe as a person, you are probably not able to be sold by me in a way because in terms of comparison, maybe in terms of, group size, maybe I'm not there. So you guys tend to sway towards people who has a bigger group and then tell you stuff. But you must understand, I am a trader here itself. I am a trader. So I will definitely do all my best to help you guys to make money in the market. That is my job, okay? So 10-year yields hit 1.6%. Now, this is something that I have been warning. Since when it was 1.1, I've been warning and warning and warning, right? So do me a little favor, guys. If you remember that Cal warned, all right, meaning that I warned you guys about this 10-year yields. All right, please key the word warn, W-A-R-N-E-D. All right, so that means that I really tell you and you remember that. So you're going to key right now. So to let people know that, you guys really were warned back then itself when I tell you guys to be very, very careful. Okay, so guys, do me a favor. Okay, if I warned you regarding about the 10-year yields, please key right now into the Facebook group chat. All right, and then remember that, okay, it was warned because I'm going to tell you this, guys, this is going to continue for quite a while. Seriously, this is going to continue for quite a while. This is something that you must remember. So that's why it's always good to just, periodically just go to look at the this 10-year yields. It will help you quite a fair bit, okay? All right, this is very, very, very important. Okay, thank you. All right, so because there is a chance of a taper tantrum coming up. Now, what is taper tantrum, right? I'll explain this shortly, okay? So before we start this morning's, okay, although I was a little bit upset, thank you for all the little coming messages, okay? Trade with the Boys team wishes all of you guys, okay, 元宵节快乐. Today is the Lantern Festival, not the one that hold lantern, okay? It's actually the Spring Lantern Festival. It's a Chinese festival celebrated on the 15th day of the first month of the lunisolar Chinese calendar, all right, unisolar calendar, okay? All right, it usually falls on the February month, which is today. So today, 26th of February is the, 15. So today is a day whereby the Chinese believe that it's time for Tang Yuan, okay? So if your family members, want to celebrate today, please go and get some Tang Yuan, go and get from the, if you don't have time to go and mow it out, then what you can do is that you can consider that, go to this, supermarket and then buy that, okay? All right, so today will be a good day to do this and celebrate with your family members. If you're outside, then celebrate with your friends, okay? All right, cool. Thank you, guys. I wish you all the best for this year itself, all right? Now, basically, yesterday I won and I won and I won. I said that the recovery on the Nasdaq on yesterday's market, right, could be just a springboard recovery, or we call it as dead cat recovery. Now, why do I say that? Because apparently itself, right, I told you guys that to put up the trend line and put the MLP. And the Pacific figure that I gave to you was 13,253. Remember that? I gave you a Pacific figure. I said that 13,253 will be a very important MLP to watch out for because it will basically coincide with the trend line. And I gave a Pacific figure again at 13,200. All right. So this was something that I mentioned. And of course, that is the technical part. The fundamental part is that I did say this, okay? On the fundamental part, I did say that, right? Likely itself, right? Nasdaq going up is because of just temporary recovery. But the problem is as long as the 10-year yields start to go higher, then it will create a cost factor to all the Nasdaq counters because these tech companies, they borrow a lot of money, and this borrowed money itself is used for their daily operation. And a lot of retailers also have been doing that to make money from it. So the moment if the interest rates has short-term interest rate has any chance of going higher, this will create a sudden barrage of panic selling. And truth be told itself, right, it really happened. So I tell you guys, 13,253 is a very important level. 13,200, this is the last level. If the market breaches it itself, right, there will be some selling coming in. And of course, truth be told itself, you can see from the chart, the market broke below the 13,253 level. And then after that, it just smashes down, go down all the way to the low of 12,762, or the Nasdaq down more than 30% in the same one trading day. So this is whereby, you know, when we as traders tell you what to look out for itself, right? It's starting to harm you. End of the day, we want to tell you. I know that fundamentally, other schools of thought say that this is a big recovery, the Nasdaq will go higher and stuff like that. Now, that is on technical ground, but you need to combine technical ground and fundamental. When you put them together itself, right, this will become very powerful. And of course, the question is this: will Nasdaq continue to fall further? Well, if you're going to ask me this question, I'm going to tell you upfront here, the answer is will. All right, I'm going to be right up front here itself. I believe that the Nasdaq will fall further. Not immediately, but it will gradually go down lower. So this is something that you guys have to pay attention to details as I covered in the morning MAO later. All right, so this is very important, okay? All right, so why is that so itself, right? Because this is a bit of a cartoon now to just simmer the thoughts here itself. All right, because now a lot of financial advisors are basically telling you that, you know, it's a bull market in a bear market, or it's a bear market in a bull market. Okay, so it's a bit confusing, and this is why it's all depending which one you want to listen. Okay, end of the day is that people are just telling you that the stock market is not the economy. It's nothing to be worried about. Stock market is on its own. You don't need to worry about that. You just have to follow through. So again, that is my point. It's just like, you know, telling you something that may happen, but because it haven't happened, right, you just brush it off. And when it happened itself, you tell me, say that, oh, okay, what should I do next? No, this is always the repertoire of things you shouldn't be doing. You always should be preparing for the other side while still following through. So when what happens is, if the market really react in the way that you are expecting to happen, you'll be there and you will know what to do. So that is why by traders, you need to have preparation. You need to plan your trade. I'm not saying that because today the market is down, I'm saying I'm right. I'm saying that, right, we were taught by the market, by the environment, but because the stock market kept on going higher, right, people just basically forgot that they actually intertwine. Okay, so put it this way, guys, success doesn't come to you. You got to go to it. All right, so that's why I always work very hard. I work very long hours just to make sure that, right, I really want to have my plans and my vision and my dreams, okay, come in. Okay, I really want to have that itself. So of course, your plan and God's plan can be very different. So guys, you can actually go for something bigger. As long as this time round, especially this year, if you get it correctly, you combine technical and fundamental together, I'm pretty sure you guys are going to make a great deal of money, all right? I'm pretty sure. So you just have to prepare yourself now, stand by the funds, you know, try to grill in the technicals that I've been sharing with you, and then work with it. Okay, work with it and do this risk management on this itself. Okay, this is very important. So disclaimer as usual, guys, I just need you to understand this. We really want you guys to succeed. So end of the day is that's why I have been doing regular revision every day. So I do revision, right? I do it on Tuesday, I do it on Wednesday, I do it on Thursday, I think. So guys, this is really the commitment that I'm doing because I really want you to succeed. Okay. All right, so now this next few charts is going to be on 10-year yields. Okay, some video. Some of you guys may not really understand what's going on here as well, right? Let me just explain in a very simple way, okay? So basically what happened is, okay, in the treasury side, there are many different type of bonds. There's 2 years bond, 5-year bond, 10-year bond, 20 years bond, 30-year bond, 50 years bond, okay? So basically it's just money. Basically they have this bond, it's like an interest ticket. You buy the bond and then they pay you the interest, okay? So the bond price and the yields are basically in the very interesting way. When the bond price goes up, the yields will come down, okay? Got the idea now? So what is happening right now is that the 10-year yield has went up. Now do understand this, 10-year yield just only about probably 3 months ago, okay? 3 months ago, the 10-year yield was only at 0.5%, 0.5%, okay? Okay, then within just 3 months, the 10-year yield surges all the way to the intraday high of yesterday of 1.6%. It basically doubled in just 3 months' time. So seriously, when this thing's happening, it's all right. It's because people felt that, right, the economy is actually going well. So that's why the people were willing to offload, and go into the market. Okay, so that is the one side of it. So when the 10 years yields went up to 1.6% itself, right? Okay, what happened is the traders felt that this move is too fast because this is like a flash movement. Okay, because this is rapid. Okay, this is considered very rapid for a bond market. It is considered rapid, and of course you can't do a short squeeze here, so it's not possible here. But because of that, right, people are asking if the yields continue to rise, right, usually there should be a smooth rotation from the into the growth and defensive stock, which is actually happening right now, all right? And that is good because when you have the market, when the people take away from the bond market, right, they move to the stock market and they buy into growth and defensive stock, that's good. But the problem is they are not doing that. That is the problem here. They are not doing that. And apparently it's right, there are a few things to watch out for today. I'll continue this session. Okay, this is something to take note of. I believe that Federal Reserve now is in a checkmate position. Yes, to me, if you know what is this move, right? This is a checkmate move, meaning that no matter whatever the king, or this is the queen actually, all right, if they, no matter how it moves, right, they are in a trouble position, because no matter how they are in trouble, right? So that's why I felt that, right, this is something very scary at this very moment right now, guys. Okay, let me explain to you slowly and you will understand why I say checkmate. Okay, and in fact, I did say this just a few days ago. So I go slow with you now. Okay, the consumer price has went up by 1.4% from a year in January. And of course, the retail sales also been going up, durable good purchases also been going up, service sector also going up. And then this all leads to inflation. All right, all these are actually creating a little bit of inflation, because why? When there's more money in the market, people willing to spend, they buy houses, they do this, they do that. Well, that stimulates economy. Now that's a good thing. But when that happens as well, undeniable, that will create inflationary problem, which is now is happening here. And apparently, right, the movement now, the 5-year break-even level, right, has moved to 2.38%. And that is the highest level since the financial crisis back in 2008. So this is something, a first warning that you need to watch out for. So, of course, Jerome Powell says this, okay, that of course, when you have an economy opening up, there will be spending, there'll be surge in spending. That is good. So as long as it's not a persistent long-term force as well, right? Okay, it was just amalgamate, it's a transitory period, so it's fine. So of course, that looks good. But the problem is this, guys. The yield actually went up is because the auction for the 7-year treasury bond, was all full. That means there were no buyers in the market. There were no buyers. So the thing is this, usually when the bond price comes down, the yield goes up. So naturally, when the yields goes up, it's how people want to buy, because then they get a better price. But the problem is there's no buyer. In fact, it was all full. Basically, there were no buyers in the market. So the question mark is, why got no buyers? So this is actually a very scary moment, okay? And of course, they are saying that because now the weekly unemployment data is slightly better than expected, so that's why the economy is good. But my point is this, is still at 700,000 cases. Seriously, it doesn't make sense. If it's like 100,000+, we can understand the economy is doing well. When it's 700,000, it's just slightly lower than 800,000. I cannot, see the point here. And of course, when they say that the GDP figures are going to be better itself, right now the question comes in. Federal Reserve is supposed to control inflation. That is their main role. So if let's say now the thing is that they've been pumping so much money into the system, all right, pumping so much money, and it seemed to be the stock market and the money they pump in is almost going in a linear fashion together. So the question is this now, if the economy is really doing that well, which now causes the yield to go up, right? The question mark is this: should you taper now? Should you taper now? Because that it makes sense. Because if not, then something is not correct, right? You cannot have best of both worlds. It's not possible. So you can see, right, that day when Jerome Powell was speaking to the Senate, all right, the community, sorry, right, what happened is that when he speak, right, the 10-year yields went down to 1.32% after hitting a high of 1.4. Then after that, when he stopped talking, the market reacted again and instantly it pushed it up to 1.6%. So now you can see that they are calling the bluffs of someone. You can see the boys are calling the bluff of someone. While someone is trying to hold down, putting things down, the market is going the other side. And the bond market itself, obviously not retailers. Retailers don't have power to do this. So there is a bigger force right now. And this bigger force is informing the market that, look, okay, you better do something to another sector. If not itself, right, there will be more problem coming up. And that is why I'm very concerned for this. So what happened is that this guy from this Morgan Stanley said that the doubling of the yields from the 0.5% to now 1.6% has caused some indigestion, but not a big sell-off problem, okay? This guy is saying that. And because the recent recovery itself, right, of the yield is not policy-driven, okay? Hence, there is not policy-driven, so it is just only transitory, right? Apparently, the word is being used again. And if that is the case itself, right, then maybe equity will just have some problem, but still it shouldn't be a concern. Now, take a look what happened. Just one day ago was 1.4%. Now, in one single day, it's 1.6%. The jump is really jumping very, very fast. So the only answer to this, if Jerome Powell is not doing anything down there on his side, then the question is, who's dumping the bonds? Because the yields goes up basically because the bond came down. That is a point. I mean, it's just that it's because Jerome Powell did not do anything. It didn't cause the dollar to go up. So the yield go up by itself, right? That means the yield is going up by its own. That means the bond price coming down. So the question is, why aren't there buyers? So is it because there's no more money to buy, or because there's no reason to buy, or because the boys are unloading to the market? So what do you think, guys? What will you think that is actually causing the bond prices to come down or the yields to go up? Please key your answer into the group chat, and I want to see what different do we have in terms of view. Okay, all right, just give me a 5-10 seconds water break. Anna, all right, they don't trust the fiat. This is one of the reason. Indeed, that is one of the potential reason itself, because now there's so much money pumped into the system, and the economy really, if you think that the economy has really recovered, right, but the numbers just doesn't add. So now the question is this: are you going to pump in more money? If yes, you're going to depreciate the dollar even further. It's not going to help. It's like, pumping into a big balloon, okay, and expect something different to happen, right? So the thing is this. Okay, somebody says Xi Jinping not buying. Okay, fair enough. As you know, guys, I covered in a few months MAO before. China is not buying, that's for sure. Japan is not buying. Germany is not buying. Russia is not buying. Yes, indeed, that is another problem. So that's why they are feeding on their own. Federal Reserve and the government are feeding on their own, and that is a problem. That is a very big problem indeed, okay? So all I can say is that, right, you look down further, so you will understand my point. Thank you guys for contributing. Now, the bond market is betting on a rate hot economy, right? That is the reason why it's going up. Then the stock market doesn't like it. You know why? I thought the market is going well, then the stock market should like it, right? Let me explain to you why, okay? First of all, you must understand, if the stock market is going up on its own, then if the economy is doing well, then it will go together. So this is what Jerome Powell really want, whereby they want both sides to go up together. That is a perfect world. But the problem is, the last crisis in the pandemic itself, right? In order to salvage the situation, they pump in so much money and it's globally plumbing the money, right? So now the problem is this: the inflationary is popping up because of the free money, and now the question mark is, they'll ask Federal, okay, look, if you really think that the market is doing so well, the economy is doing well, then you should stop tapering. But he knows that the more you stop tapering, stop putting money, if you stop putting money, the market going to crack. And once the market crack itself, it cause a repercussion back down to whatever it is, all right, which is back in the economy. So he's in a very big problem here. Honestly, he have just let go the market back then, but obviously they need to do something, right, as usual. So no choice. So what is happening now is this: the market now is saying this, okay, that the market now is putting a lot of money, about 120 billion into the market. So if the interest rates, the yields are going up and the economy is doing good, then the tapering should come in soon. All right, now everybody knows that Federal Reserve did say that they will look to taper maybe later this year or even next year, and the interest rate will not go up within the next 2 years. All right, they already said that, and the market likes it. But now with the yields are going up itself, right, then the thing is, this may totally change again. Indeed, it's a catch-22 for them itself, indeed, right? So now you think about this, what should they do? Well, the moment they taper, the market will crash, because that's how it's happening, right? If you don't taper, the interest rate goes up. Then how? So now is that every day they're just going to try to talk down the market, but the market is calling the bluff. The market is calling the bluff. So the problem now is this, okay? This is one more concern. The rising yields now, right, is going to hit one market very hard, and that's a mortgage market, because a lot of people borrow money. So the mortgages itself, right, will see a sudden increase of cost for themselves. And then if, let's say, if Federal Reserve at this moment say, okay, because I need to do this, I taper the market, the stock market crash, oh my God, a lot of people, especially today now, so many people speculating the market, they will get hit immediately. That is the reason why I can tell you this stimulus package itself that's going to come out, right, is going to have another problem, because the moment this money pours into the market, this will create the inflationary problem even bigger. It will drive the yields even higher. Because the reason why the yields are going up, because with this money coming into the system, the market is speculating that the economy will do well, right? If it's going to go well, the yield will go up. And this will create a bigger bubble. So this 1.9 trillion stimulus, right, is not a good thing, my friends. Although that I know that the 1.9 will create the stock market to go a bit higher, but I tell you this will kill the market actually. This will actually kill the market. So now, if you recall back in 2013, there was a taper tantrum whereby when there's a sudden spike in the treasury yields in the market, remember that, because the Federal Reserve came in and said that they'll start to taper their QE, remember that? And because of that moment itself, right, everybody interest rate was at a low end, and then we started to increase interest rate, the market taper, the stock market just went havoc, right? Remember that? So it's really become a problem, right? It became a problem. So this guy, the Barclays head of European equity strategy, says that right now the rising bond yield were overdue. And they say that it's because the lagging improving economic outlook was not in the market. So if he felt it's a normal thing, okay? He felt that it's a normal thing. And he says that since the inflation is going up, the prospect of more fiscal stimulus will come in, and this will push the market and everything looks good. Now, this is very positive thinking. But actually, on the other side itself, right, you must also understand this, all right? With all this thing ongoing now, right, it doesn't make sense now for the Federal Reserve to keep on putting money in the system, because that will create the inflationary problem. So now the thing is this, he's still saying that, right, the yields is still good. And in fact, this should be taken as a, come down by situation. So you see, this is the different views from people. So that is the problem. So you see the bigger picture now. Right, so Colin, as you say, right, the stimulus come in, the bear market may be short-lived because of money coming in, but it creates more problem. You understand? Okay, give you an example. It's just like a guy is very obese, very, very obese, all right? Then you don't let him eat. Okay, you don't let him eat, you starve him for a few days. So what happened? Okay, he'll get depressed, you get very upset, and it pains you because this guy is your food friend. Then what should you do? And he wants only the fatty stuff. He wants sugary stuff. He just want to be happy. So give or don't give. Now you understand this, my friend. It's just about that factor here as an analogy here. this metaphor. So if you give, you know what happened, right? He may go into a cardiac arrest. He may have his, blood vessel stuck and stuff like that. So now Federal Reserve is in that particular position. What he should have done is to help his friend slim down the correct way. But instead, he wanted his friend to be happy. He pumped in with so much sugar. So now that is the problem with the Federal Reserve. So now investors are getting worried. Okay, they're getting worried because now they're saying that now the valuation now starts to become reality already. Now earlier itself, the market is saying the valuation is not important. Now they're saying that the valuation is important. You see, this is how the market always transits itself. So because of that, right, the way the yields is going up itself, it's going to maybe shift or force Federal Reserve to shift their expectation or reduce their bond purchases, and that is bad. So you can see me repeating and repeating, but what is very important is this. It is because now we are seeing oil at high since 2018, copper at 10 years high. So what is happening now? The cost of living is increasing, but doesn't mean the employment or our so-called earnings is not covering up together. And now the thing is that the stock market that's holding the hopes of everybody now is now in the jeopardy because it's an all-time high and it's like multiple highs in terms of valuation. So now the problem is this: the economy is not going in. The economic growth is not going in. So how? What can they do, right? So seriously, someone must let go. So it's either that they continue to stimulate and just don't care, don't bother, and then let the market realize it one day, or they start doing it now. And that is my point here, my friends. So this 1.9 stimulus package is all right. It's going to be a double whammy, all right? It will do good and it will kill the economy at the same time. Okay, so I hope you guys understand what I'm covering is all right and why it's so now that now the yield is all right, it's not good. And again, I stress this once again: if the yield cross 1.7, the market is going to rock again, and the market hit 1.8%, the market will probably look into reality that right, there's a good chance the Federal Reserve has to do something in the near term. Okay, so we all know, I see you guys are banking on this 1.9 trillion. Now, do me a favor. This 1.9 trillion is nothing new. It has been talked, and the market had bought into this weeks ago. That means that the market already knows and expected this money to come in. But now, this morning, there is a sudden slap in the face whereby the $15 minimum wage may not be given because some Senate officials are not going to, go with the flow. Why is that so? Because some of them is opposing this $15 wage. They look for the $11. You know why? Because once you increase the wages, right, it looks good, right? But it will help some people. But some jobs who cannot afford this $15 wages, right, will just cut the guy away. You think about this, this is the crazy part of the whole damn thing here itself, is that they want to help some people, okay? But then they will forsake more people. And if, let's say, if the economy is not doing well, let's say, or the stock market is to crash down or sell down, then this one will kill. Because when you think about this, you implemented $15 as a raw law. And if the stock market suddenly crashed down because you cannot pump in more money in the system, right? Then what will happen? People will just cut away people. Companies will close down. Shop will reduce, and then this will become a big problem. So now the question is this: should they even at this stage now come out the money? Should they even come out this package now to save the economy? It's just like now if they put it in, they will kill the market even faster. So you see the point now that I'm linking for you guys, and this is whereby the concern come in. Okay. So this is the morning news today. So I know that it's a lot of fundamental facts and figures. Okay. All right. Okay, sorry, Anna. Okay, just okay. That's okay. All right. Anyway, guys, on this coming Saturday, which is tomorrow, okay, please, guys, if you really been benefiting from all my MAOs and you've been benefiting from all my sharing, do me a favor. I have a management to answer. My job is to basically become the spokesperson for TWB System, and I want you guys to bring in more friends. We have about 65 people sign up. That's good, but we all know that usually they sign up, about 30% don't turn up. So 65 people sign up times by 60%, we get about 40 plus people. We need to hit 60 at least. And on 60 at least, I got a chance to get 10 students. So do me a favor, guys. help me out and get more friends for this coming preview. Okay, just go to tradewiththeboys.com/preview and tell them to come. All right, I'll show them how to use a simple calculator to predict the market, and you guys know what have I done, right? So you know that what is this 1660, you also know what's 12518. Yes, indeed, this is all calculated numbers, and I did that before. So that is my verdict on gold and Nasdaq. If they do come down to these two levels, it's all right, it will be a pretty good price to watch the market. Okay, so guys, pay attention to these two prices. Okay, all right, thank you so much for your support. So Dow Jones yesterday, basically from the opening bell, came all the way down and went down to 31,400 level. It was just selling at every wave. You can see that at every wave itself, the market just keep on selling. Every time the market recover, it sell. Every time recover, it sold down. All right. So this is actually distribution already. This is very clear-cut distribution. The bonds are getting out in the market, in my personal opinion. So let's go to the fundamental. So the Dow Jones lost 560 points in fact itself, right? And Nasdaq shit 3.5%, the worst sell-off since October last year. And the rationale is that because Alphabet, Facebook, Apple all went down by 3%, and Tesla went down by 8.1%. I don't know what will Cathy Wood be thinking, but I think she will have some nightmare, correct? All right, so 8.1%, though she just bought it and the market came down again. So this is something scary. If she's going to implement what she's doing and buy again, I really wish her all the best and hope that the market recover for herself. Because if it doesn't, right, then the whole world know that she bought so many of this stock and she has this ETF running now. If the market goes down further, it will cause panic, redemption, and a lot of other things will happen together. And this is the scary part itself. This is something that I cannot imagine. So traders, you need to be very careful from next month onward, from March in fact itself. March, April, I told you guys to be very careful on these 2 months because fundamentally it may cause some problem. Okay, so the thing is this, traders now are feeling that they're telling you that, right, because now of the yields going up itself, right, the equity become a riskier asset and doesn't have the type of same premium or less attractive. Oh, okay. So because of that itself, right, traders are dumping it. So this is what is actually happening right here. But again, Jerome Powell keep on emphasizing that the central bank commitment to easy policy and downplay the risk of inflation. And he will say that it will be 3 years. So again, Jerome Powell is just saying that no way, if everything is good, inflation is down, okay, yada not, okay. So my point is this: if you believe in Jerome Powell, stick to the long side. If you don't believe Jerome Powell, stick to the short side. So it's all about that is what you need to do, okay. All right, indeed. So now you can see on the news side itself, right, the Dow Jones is coming off a little bit because of all this ongoing now, right? So with more vaccination ongoing, with more people getting vaccinated, so they will try to go back in the economy to do something, right? That's if they do that. If they do that and there's still no recovery in economy, then there is another problem on its own, okay? So let's take a look at the Dow Jones, shall we, for yesterday and do a recap, okay? A quick one. So the Dow Jones, right? Before we do the Dow Jones recap, let's look at the Hang Seng first. I know that you guys are asking for Hang Seng right now. Oh dear, Hong Kong Hang Seng is coming down, right? It is, okay. Hang Seng opening price is here, right? And I told you as long Hang Seng stay below the opening price, Hang Seng will be coming down. And indeed, it's really happening as we are speaking right now. So I already told you guys Hang Seng most likely will come down to this price, 29,085. I'm not too sure. Have you heard me the first time? So guys, I'm saying that Hang Seng most likely will be trading downwards to this particular price itself. Traders, you need to really take advantage of this position here itself, right? So I'm not too sure if you are listening to me, but if you are, good for you. I really want you guys to make good money from the market, okay? My best wish is for you to make money from the market. This is my ultimate wish for all of you guys. Okay, you guys asking me, will Hang Seng really plunge further down? I think it will, because first of all, the cost of trading has increased for the stamp duty, and now with the market behaving like this, is right, it could cause even more selling. All right, this will cause. So that's why I strongly believe that there's a very good chance that the Hang Seng may touch the 29,085 level. Okay, so traders, you just do what you need to do lah. I already give you my personal take already. Okay. Okay, so watch out for this for Hang Seng. Okay, I'm gonna bring up Hang Seng up now because I know guys, many of you trade Hang Seng. So let's go through and recap what happened on the Dow Jones. So the Dow Jones opened here. Now, yesterday, the KSI was green. So logically speaking, it should be more towards the buy side, right? But of course, you must remember this, the key is the opening. I say this many, many times. I'm going to repeat myself the 10,000 time again. If the market stays below OP, then no need to tell me the market is in the selling mode. That's very clear. So when the market goes up and fail to go above KTR plus 1. Now, please write it down somewhere. If not, please put it there, okay? That whenever the market is supposed to be up deal, going up, right, the first thing it must do is that it must cross above KTR plus 1. Because KTR plus 1 is a standard deviation of the market. So if the market is bullish and everybody tells you it's a buyer market, right, the market has to go above KTR plus 1. That is a minimum. I've been saying this for lots of time. Whenever the market KSI is green in color or the market expected to go higher and that very day the market cannot even go to KTR plus 1 or even it reaches there, it failed to stay above and pulls back, that is a classic sell signal. It's a classic sell signal. And of course, dear friends, you know this a lot of time. I've said this before. When the market goes below P2 and the market is below OP and below P2, that's it. You cannot ask anything else. It's a sell, 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 sell. The only thing is that the KSI happen to be green. You just take profit along the way. All right. That is the point that you should be doing with the system. If not, you are not using the system to the right advantage of it. Now, yesterday, it was very beneficial for me to basically went dinner with a very powerful trader, as you know who is that guy, right? And basically, he says this, Kel, your system really works. The thing is this, just follow the system. It is really wonderful. So, of course, I was very happy with the compliment, and I also feel very blessed with his sharing of his trading methodology with me. And I realized that, right, guys, you guys actually now is holding one of the most powerful systems in the world. Okay, are you saying that, right? So you just have to follow. You just have to follow. So if you have followed what you know, and then you do this, okay, you do this, guys. You take a look. If you have to just follow the system yesterday, and you look at it, the market just couldn't go past the KTR plus 1 level. You notice that the market just couldn't go past the KTR plus 1 level. That is a first sign of trouble. And then after that, the price had to come down. Now, once it go below the pivot 2, that's it. Nothing can be done. Nothing, because the market now is going to go to sell mode. And you look at the system of mine. Look at it, my friends. From this point here itself, right, the market already tell you the boys are dumping. The boys are dumping. So when the market try to recover over this stage here itself, right, you notice there's a BNB over here. There is a BNB right here. It's a small little BNB, but it's there. And once you see the BNB come with a zebra formation, right, you know something is not going to be good. And of course, with the KSI rate itself, oh my God, the market sold off even stronger. Now, during this part, the market tried to recover, right? It tried to recover, right? You see that? But it couldn't, because why? The KSI is red. So the moment the market do a CCYR, is below P2, is below OP, you have to sell. And even at the last moment, you can sell for 200 points. So that tells you the market is full of sellers at this moment. And why? Is it panic? Is it because the market is worried? It is possible. Now, for those people who are in my PTP, all right, in my PTP, I already warned you recently when you see that the KRW has basically been coming down. And 3 days ago, the KRW has turned from blue to red. So that's the reason why 2 days ago, which is this day here, all right, the yellow bar, I was basically telling you guys, are you still going to buy? Remember yesterday, MAO, right? A lot of people asking me, Kel, can we buy? And I keep on warning on the side. I say, guys, don't do it anymore. Right? I don't know whether you heard me or I didn't say myself clearly, but I did tell you guys to be very, very careful, right? Because 32,000 was traded. And I gave you two figures, right? I gave you two figures. I gave you 32,000, then I gave you 30,000, right? So now what we see is that the 32,000 has been triggered, right? So logically speaking now, the next thing the market would be going down, it is possible for the market to go down to 30,000. So would this really happen? I don't know, but based on what I'm seeing now, it is a possible chance, okay? Possible. So remember this. Possible is one, follow the chart is another. If the chart says buy, just buy. If the chart says sell, do your selling. Okay, that is what you need to do as a trader. You're not here to predict the market. We're here to make money off the market. Okay, so the quote is very simple, guys. If you follow the system, if the market say cut, cut. If the market say is with your way, go with the right. Okay, write it up and make as much as money as possible. Okay, so got it? All right, so that is what happened on the market here. And the Dow Jones, what happened? Okay, so let's look at the technical side of the market right now. Okay, Hang Seng has just rebounded strongly. Okay, just rebounded because the KCB is there. All right, rebounded, but still is below opening price. So then the KCB is trying to push the market up itself. So you guys just follow the chart and trade accordingly. All right, that is my my best deal for you lah to reconsider. Okay. Now, Dow Jones now, oh, wow, this is interesting. Look at it, look at it, look at it. The Dow Jones now is holding itself at the MA30, okay? The Dow Jones is holding itself at the MA30. And the Dow Jones has created a new BNB. So I'm going to change my BNB to this point here. Okay, now I have a new BNB now. Okay, now this is incredible. This is also very scary. Let me explain this to you. Now, take a look, guys. Okay, look. Okay. Now, the new BNB, this is the RL, and this will be the SL. So which means that the SL now is going to be a very strong support level. And now we saw this morning, the market got supported over there. So this is a very critical point. So as long as the market stays above the yesterday's low, the Dow Jones is still okay, all right, still okay. But do you notice that, right, today's opening price and the MA is really, really very nearby each other. So today my MA reading is about 31.32.1. And today opening price is 31.32.4, around there. So as long as the Dow Jones stays above OP today, the Dow Jones should be okay. I repeat myself one more time. If the Dow Jones stays above the OP for today, the Dow Jones should be still okay for time being. But if the Dow Jones goes below OP, guys, you better run, okay? Because once it bridges the MA30 and close below, right? We've seen this before. So now the bet will be here. The bet will be here. Will the market close above? Now, if the market close above, we could see the market going back up again. So that means there's a chance for the Dow going back up. So I can now change the MLP a bit. MLP should be roughly around here. And that's about 31,648 level, right? Somewhere around there. So as long as the Dow Jones stays up, the Dow Jones can go back to the MLP level. But if the market stays below, and what you've seen before, right, this could be the cascading effect. So now the bet is this. Some of you are saying that let's just buy the Dow Jones and bet that the 1.9 trillion package will come in and the Dow Jones will recover like we saw back in January. Okay, that is not a bad choice as long as you're buying and you know your downside risk. Now, of course, people who are shorting the market itself, right, then I'll tell you my personal view is that either you short high to bring it down or you just wait. Wait for the price to now go below the opening price, and that will be much safer for you as a trader because you really want to follow the real market because the market trend is still up at this moment right now and the MA is still there. So it's basically supporting the market. You do not want to go against the market. So all clear yourself. If all clear, please key the word clear, CLEAR, into the group chat on the Dow Jones that I just drawn for you. Okay, guys? I'll take some water. Okay, right. Thank you, guys. Okay, so what you can see on the Dow Jones right now, okay, you can see on the Dow Jones chart, this is the longer term chart. And let me just show you this particular drawing of mine. So I want to draw this again for everybody understanding. Now, what I'm trying to say is here is that if the Dow Jones continue to go up, the Dow Jones has the potential to go up to 32,243. Okay, this is going to repeat myself one more time. Okay, that is what the Dow could go if the market do find strength and goes up further. Now, if the Dow Jones come down, it may come down and break my trend line. And if it comes and break my trend line, do watch out for this particular date that I'm saying, that is 30th of April. All right, 30th of April. So you understand why am I pretty concerned for next month. All right, if next month, if the market can go up further, that is fine. But with now the 10-year yields going in this manner, and of course, gradually it's all more and more stuff are popping up, right? There is a possible chance to see March and April coming down. Then the market find a base somewhere. then probably on 30th of April, then the market may actually recover again, because now the price has come down off a bit, it become very good to buy, and the economy is recovering after 2 months of all this problem. All right, so this is something that, in my perspective, if I were to basically, tell you a forecast and I'm forced to read this out, right, then this will be my personal forecast here itself. Okay, my personal forecast. Now, don't ask me how much the Dow will go down. I really don't know. Let's look at 30,000 first. Okay, if the Dow can go to 30,000, then we look at the market again. Okay, 30,000. So now it's still way too early to call. Okay, 30,000. All right. Okay, so that is the another chart. So this is the long-term chart. Nothing much has changed. I'm going to skip it. My weekly chart itself, this is not very nice. This is a very clear reversal tweezer here. And this is not very nice for a weekly chart. And the last time we see something like that itself, right, is something like this. So traders, you need to be very careful, because the last time in February, this is what we saw, right, whereby the market went up strongly. Then after that, 2 white candles. Then after that, followed by a black candle. And the next week, the market gapped down, and that was where the market paused. So of course, I'm not saying that the market will gap down on Monday, but Monday is 3 days difference. So either you suspect that Friday today, the Jerome Powell going to push up the market, or if he's not going to do anything, or the yields go too fast, Monday morning gap down, anything and everything can all happen. So traders, just be careful. All right. My personal thing is this: if you are short selling, just sell a little bit and let's see whether you get bonus out of it. For the buyers itself, right, also reduce your buying position just in case the deal or the stimulus just have any hiccup. Okay, this is something that I personally take. Don't need to hold too big a position over this weekend. All right, you can do more thing on Monday. Okay, so that is my very fair assessment here itself. All right. So let's look at the Hang Seng now has recovered, go above OP. That's a good deal. That's a good deal. As long as stay above OP, the long guys are okay. Let's look at Dow Jones first. Okay, now this is the Dow Jones for today. Now Dow Jones, as I mentioned to you today, the Dow Jones opening price is actually below the P2, right? And the 31,787 is the upside potential target. So the KSI of the Dow Jones is green. So that means if the market go to KTR -1 to -3, actually it's a good time to buy the Dow Jones. And there is a technical level here at 31,214. The Dow Jones missed it by a few points earlier. But if you look at the 15-minute chart now, you can see the close picture of this. Right, you can see that the Dow Jones in the morning came down, but misses a KTR -1 by a few points and recover. But the problem is, although the recovery is happening, right, the KSI is still green, red in color, now turning, trying some buying here. And there is a intraday TSCB at about 31,316. So as long as the market stays above 31,316, okay, the Dow Jones should see some artificial support. Now, with the market down by almost 560 points, it's really possible for the market to have some bargain hunters coming in. So that's why the market will be a bit choppy. The real movement will be European side, and European market itself, right, they missed the selling towards the end, right? So be careful, there might be some selling at about 2 p.m. Singapore time later. Okay, just watch out for that. Okay, so that is the Dow Jones. Okay, sorry. Let's look at the Nasdaq. The Nasdaq, as you can see already, this is not very nice side here. The Nasdaq itself is trying to hold above the OP compared to the Dow Jones, because Nasdaq will be the count, is a sector that could be heavily hit by that. So before we go there, let's take a look at the 10-year yields and we see whether or not, what numbers are we seeing right now. Let me just bring it to you guys. Okay, you can go to marketwatch.com. You can see that, okay, the 10-year yields has some pullback at the moment now. So maybe some intervention has came in. So that's the reason why you see the Dow Jones is recovering. But again, this type of intervention, if it's going to be what they call by some human intervention, then usually there will be time you call the bluff. And when you call the bluff, usually it will go even higher later. So I can tell you guys that right now it's down, so it's fine. So hopefully it stayed down for today and it will stay like this. So those people who are in a long position, you can actually, have some breathing space. But if later on, for some reason, the yields shoot up itself, right, then there will be more selling to come. So traders, periodically, just go to marketwatch.com and watch the 10-year yields treasury notes. It will help you a little bit, okay? Just a simple, friendly advice. So now you can see that the Nasdaq is now trading below the trend line already. So that means there could be a little bit more selling to go. All right, now the MA30 is very clear, it's very far away, it's at 13,423, so a bit far, so no need to really bother by that. Okay, so where will be the next artificial support now? Because it's a BNB, right? So that means the BNB high and low can be used as a guidance. Okay, so the high and low, we can use it as a guidance for us to know what to do with the Nasdaq. So I do suspect the Nasdaq will be a bit of a sideways movement until the European market comes in. So you heard me, guys? Okay. Now, for those doing S&P 500 itself, right, the S&P 500, the MA is about 3880. So at the moment now, it's still okay. Traders, no problem. Just stay with it itself, okay? All right, now I was requested by friends to do DEX because some time ago I did do DEX, but after that I realized that most people are not following through, so I didn't do it anymore. But since it's a request, then I will just do it for your sake. All right, so DEX, let me bring it in DEX now. Okay, for DEX, it's not good at all. DEX, basically, you can see the closing was below the MA 30. So I suspect that DEX has the potential to come down to the MA 200 in the near future. I repeat myself one more time. I suspect that DEX may be coming down to this point here, which is the MA 200. So in the long haul, I suspect that the DEX may come down to 13,400 region, okay? 13,400 region, okay? All right, this is my personal take. But once you come down to there, it's all right, there could be artificial support. The artificial support should be around here. So the artificial support is around here. That's why I say about 13,400 should be a level to watch out for the DEX market, 13.4, okay? Now, in between, I will tell you, be very careful because you can see full of white candles, right? And a lot of gaps. Now, when the market have a lot of gaps, usually it will be able to covered by the traders. So that's why with gaps in the market, there is a fair good chance for DEX to go down to 13,400 level. Yeah, indeed, DEX is a very good market to trade. Honestly, if you actually can do yourself a favor, right, guys, purchase the DEX indicator from us, then you back test. I can tell you this, making money from DEX itself is much easier than doing Dow, even S&P. Really, I'm not kidding you guys, and some of the timing is pretty good. DEX market at 3 p.m., right, it opens, right? So from 3 p.m. to 6 p.m., if you can trade the first 3 hours, it's good enough already. It is better than Dow. Dow is really, I could quote his word again. Dow is like as a woman, it's really very difficult to really understand because end of the day itself, right, there's Tantrum, you need to be trading, you must be nice to this market itself, it can swing you like crazy, correct? And okay, I'm not being sexist here, but this is quoting from someone who had dinner with me yesterday, okay? You guys know that I don't do that. Okay, anyway, DEX is much better, guys. DEX is much better. So take time and look at DEX. If can, later in the afternoon, I'll try to do some DEX sharing if I can, okay? Let me see my schedule for today. Pretty tight because tomorrow I got preview already. Okay, all right, maybe someone else can do the DEX sharing, okay, later on when DEX open, that'd be cool, right? Okay, so that is, we covered the indexes. Now, how about gold? Now, gold prices has been coming down and I've been repeating to you guys. Again, this is one of the problems this morning, okay? This morning, many people been texting me how Cal can buy gold or not. I mean, they're all. I have been saying this. As long as equity market come down, gold will naturally come down also. Now, let me explain to you why do I want to say that. Okay, let me just bring to you now the current dollar index. Okay, let me just bring it down to you, dollar index. FX rates. Wow, Anna is such a smart lady, really smart. Okay, guys, take a look at the US dollar index. Okay, this is the US dollar index. Take a look, guys, for the past 5 days. Now, the last 5 days, the dollar actually didn't move much, right? Now, this is something that I need to tell you extra now. If the US yield, 10-year yields are moving up, by theory and by right, the US dollar should go up. By theory. But the problem is not doing that, and that is another concern. That means that the more is more towards not physical policy changing. It's because of unloading in the bonds market. And there's no confidence. Yes, indeed. That is a real reason why you have seen the dollar not really moving the last 5 days. So if you look at it itself, right, overall itself is more towards the downside, right? Overall, right, you look at it more towards the downside than upside. So you think about it, if the dollar is supposed to be downside, then the gold should go up, right? But the gold market did not go up. In fact, it came down. So that is the problem here itself for gold. So if the equity market kept coming down, if it goes down further because of the US 10-year yield goes up, right, then gold can go lower. Gold can go even lower. That is why I know that fundamentally a lot of traders are calling for buy, but I'm telling you this, the equity going up, going down, and gold going up, the type of theory doesn't make sense now at this period. This type of thing will make sense when the market want it to be in that manner. That means that when the market want to tell you that, okay, buy equity, short gold, buy short equity, buy gold. When that time come in, right, they'll tell you, and you will see that you will be behaving like that. But after a while later, it will just decouple by itself. And I've been saying this many times already. So now you see that gold prices plummet down based on treasury yields soaring, right? So what to do with gold? And this is whereby they are telling you that now there's a problem here. I don't know what to do with gold. Now, one moment they say that now the easy money policy, gold dollars supposed to go downwards, but gold should go up, right? It's not happening. So whatever they are saying now, it's not happening. Everything is going havoc, right? So what can you do? Just follow the system, my friends. Just follow. The opening price of gold was above pivot 1. And I say this again, if the market stays above OP, no problem. But if the market goes below OP, this is a problem. And of course, if the market breaches the pivot 1, it becomes one of the color changes at the pivots, right? And that is usually a good time to trade. And with the KSI yesterday was red in color, that means the market is biased towards the sell side. Biased to the sell side. So yesterday for gold, you just had to sell gold. Sell gold until where? If you actually follow through, it's a pivot to pivot. Oh my God, from pivot 1 all the way to pivot 2. Oh my goodness, $31 movement. Wow, imagine that. So you can see, right, guys, the reason why I keep on telling you guys that when the CCRY on a day chart doesn't really work, right, the opposite will happen usually. And this is what really happened. That's why for those who caught this, and I told you guys that there's something very scary on gold, and I told you yesterday, gold yesterday was a doji, right? When gold was a doji yesterday, I told you the gold will go into a directional move. I said that, right, guys? Remember this? If you remember this key word doji, DOJI space DD. All right, I'm going to key for you now. Just do it together with me. Doji, DOJI, DD. Which means that, right, usually it's all right, when you see a doji day, the next day there is a very good chance to see a directional day. Not 100%. Nothing is 100%, but if it happens, then you should know. And if it's directional day, you just have to keep on follow the trend. If it's a directional trend upwards, CCRY, 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 CCRY. If the market is the downtrend going down, you just have to do the CCRY on the sell side. So if it's a downtrend like what you saw in the gold, because the KSI is great, and you know that the downside is potentially there, then you just have to do the DJ doji followed by the direction day CCYR every 15 minutes chart. Okay, every time you see a CCYR, you just have to sell the gold market. So that is the formula to make money, right? So let's see whether did it really manifest as what we say so in the intraday chart. So you look at intraday chart, if you follow what I just tell you, all right, once the market is below OP and below pivot 2, you concentrate on CCYR. You concentrate on CCYR. You concentrate on CCYR. Take a look. My God, seriously, guys, if yesterday, if you just follow the T about how to trade market using the system, and you know that below P2, below OP, you just have to follow one simple formula: CCYR sell. Yellow to red, just sell the gold, and you have made so much money. Is it correct? If you think it's correct, right, you remember this, please key REM into the group chat right now. So that means that, right, you guys remember what I say. And I'm going to tell you this, guys, along the way from now till May, I suspect that there'll be more days whereby the market will be away from the pivots. Now, based on my personal understanding here, there's a fairly good chance that the next 2 months, the market will move away from the pivots, meaning the opening price will be away from the pivots. And when that happens, it's all right, you just have to remember the classic rule, because that is going to help you a lot in your trading, all right? So please remember that, and I wish you all the best, because this is a great time to make a lot of money. Remember, you can plan your house, but maybe God has a bigger plan for you, have a bigger house, all right? I hope you guys are ready to make big money from the market, and let's do it together, okay? All right, so remember that, and this is what happened to gold. All right, so that is gold. Let's look at gold in trading yesterday for today's market for gold. Okay, let's look at gold now. Okay, this is gold chart. You can see right now gold. Gold MA now is actually here at about 1810, 1810, okay? All right, 1810. So let me just give you numbers right now. 1810, 1810 is the level for MA30. And now with the gold $30 away, I don't think it's possible to go there anymore for now, at least for today. And the MA200 for it is 1866, so even further away, right? So don't really see much of chance of going there. Then what he's going to see right now is that for that today, gold could be testing again this figure. Now think about this: if anybody will have bought gold around this period, right? So naturally, their stop loss order will be here, right? That was what happened. That's why the market triggered this point and the gold came lower. So the next stop loss level should be about 1760. So that is where a lot of traders will be putting their stop loss order there at 1760. So my personal suspect is this: if gold price do come down later, gold will go down to test 1760 again. All right, it may test, now it's a 1771 now. So it may test down to 1760 again later on based on technical analysis, okay? And if you remember this as well, right, on the calculation itself, 1762 is the minus 15%. So the market may break it and the market may again have buyers coming in. So later on, if gold do come down to 1762 or lower, traders watch out here. There could be some temporarily recovery at that period of time. So traders just watch out for. But do remember, if the gold do close below 1760, then that's it. Then that's it, all right? The gold could go down all the way. Gold could go down all the way to the next level that I mentioned to you is 1689. So if gold do come down below the 1760 mark, there is a chance to see gold trading the 1689 level, okay? All right, Yvonne was told that with inflation and GameStop shenanigans, silver is a next safer bet for on top of gold and crypto. Okay, so all right, that is the usual thing that people will tell me. So let's take a look at silver, shall we? All right, silver. Right, this is silver. Do you see that the silver is going against the traffic of gold, or is moving the same way with gold? I think that is your answer. Dear all, it's all right. As much as a lot of people will tell you certain things because they need to sell you certain thing, you need to follow the chart. If now silver is going the opposite direction, it's all right. Then of course, whatever you say is actually correct. But now you can see silver is trying to fight on its life at the MA30. So if silver stays below the $27.20 level, right, silver will be coming down again. I repeat, if silver failed to stay above $27.20, then silver has the potential to come down all the way to about $25.80 range, okay? So that is my personal take on silver right now, okay? All right, Yvonne, so hopefully I actually gave you my view here itself. Now, the thing is this, I have said this before, I want to say this again, guys. I strongly believe that after this equity market, I have really do the realistic correctional move. Okay, realistic meaning, right? I still believe the stock market can go up. I still believe the stock market can go up in the next few by 2022. I still believe the stock market will go up to 33,000, 35,000. But I believe that there might be a reasonable pullback of between 5 to even 20% pullback first. Then after that, the economy is already recovering from the COVID, and also the money has came in the market. Everybody, now the price is lower, the valuation become realistically acceptable. Then at the very moment itself, right, you could see the gold and silver prices going up, because that was whereby people started to combat inflation. And of course, if let's say Federal Reserve had to pump in more money again with some way or another, then later part gold and silver will go up. So I repeat myself, I strongly believe that there will be some selling, because as long equity market come down, gold and silver will also come down. After a while later, maybe 2-3 months later, when the gold price maybe come down to 1660 or even lower, then at that moment itself, right, look to buy gold, and that time itself, just buy gold all the way, and you're gonna make good money. So for those people who want to make good money and make hundreds of thousands of dollars or even millions of dollars, right, like what the M trader wants to do, all right, and the B trader want to do also, called A trader, or so many names like MBA. All right, these three traders, all right, if they want to really, they are very prepared to make a lot of money from gold. So I will want you guys to also join us together and make a lot of money from gold. For equity market, I have my reservation, but for gold itself, right, it's very clear. I can foresee that what will happen very soon in the next 6 months to 9 months time on gold market. So join me together, all right? Join me together when that comes, okay? You really need to do that. Now, at the moment now, we just borrow more arrows from the market, okay? All right, so that is the silver outlook, and I share you gold, right? So that is the outlook for today. So yesterday for us come to this Bitcoin, we were hit, okay? Yesterday, very upfront here, 4 trades, okay? 4 trades, all right? We lost 3 trades. Now, of course, you look at on hindsight, the market was below P2 and the market was trading below OP, obviously. That's why the buying wasn't there itself. But that also constructively tell you that, right, my concern back then on Bitcoin, I told you guys Bitcoin would be coming down together. I already told you guys, and it's be good that you actually have listened to me. I really hope they've done that. So let's look at the Bitcoin now on the daily chart. You can see it's really not healthy. Now, the Bitcoin, I told you that it's a very powerful level based on my TSCB. This level is 49,598, right? Remember this, I told you, as long as Bitcoin fail to stay above this figure, there will be selling on Bitcoin, and you can see it's really happening. So that's why, guys, PTP itself is a very worth it class to go. And if you want to join PTP, it's much easier to speak the lingo that I can talk to you, because you can understand me better. I can tell you how the psychology of traders will be thinking versus the market, and how the big boys basically screw up the traders. Once you have all these tools on your hand, all right, like MLP and this TSCB, all these things, like even the special line that this M trader is using, once you basically got the hang of it, right, things can be much, much easier. That is the reason why I keep on repeating to you guys, if you can, save up some money and prepare to join the next PTP, okay? So when the next PTP, I don't know. I really don't know. I'm pretty swamped right now with a lot of stuff, so I can't tell you exactly when it is, but if it comes, just prepare for that, okay? It's a 3-day class. Now, for Bitcoin at the moment now, right, we can see that there is a KCB right here itself at 44,900 plus series. So if the market can hold around there, that'd be good. Because at the moment now, the KSI is still green, but the blue bar have extended down. So I'm going to give you a little tip here, go all of you guys. Let's take a look here. If you look at the chart, right, you can see the last time we see a KCB, the last time we see a KCX on Bitcoin was here. And after that, that was where Bitcoin basically, bottom out. Now, back then itself, right, when I tell you guys, whenever you see a KCX, right, you can buy. And the time what happened is when the Bitcoin rally up, right, and then it came back down, a lot of people were questioning me and say, Kel, maybe this time the Bitcoin will crash. I say no, because why? The KCX is there. So now what we're seeing is the same exact replica of what happened previously. And it seems to be soon we will see a KCX popping up on the day chart. And that is whereby I would like you guys to look to buy, because I strongly believe that as long the Yellen do not do anything silly, the Bitcoin will recover from the bottom. Now, how much would that be? Well, it is possible between 44,000 to about 40,000. If you do the mathematics right, you can do the maths and you will know exactly what to do for. So if I can have a wish list, I would love to buy somewhere around here lah. So it's about 39,000 to 40,000. So that will be my personal take. If you can go to 35, it will be better, right? 35 will be a very good price to buy for Bitcoin if let's say that the bull market just stays down there itself. Okay, so I give you my two number to watch out for. That's 40,000 to 35. Of course, look at the KCX first. If the KCX is playing ready, right? Then let's just stand by already. Okay, so that is the very, very important sharing for today's Bitcoin, right? For the Hong Kong. Okay, guys, then wait a minute. Don't run away. Don't run away. Let me see anything to share with you. All right, now, since I have no time to take a break, I just share to you, this is the spread between the VIX indicator and S&P 2 weeks volatility. And you can see that now the volatility is really at the high level, but dumping is incredible. Take a look at this, something very, very interesting. Take a look, everybody. Now, usually when the spread between the VIX and the S&P is at a higher level, now usually when that happens itself, right, the market will so-called tank a little bit lah. So we can see that this is what's happening. Okay, you can see in terms of retrospect, right? So the problem is this, the last few days itself, right, it hits, but the market did not react. So it was more of a delayed telecast than what happened yesterday. So if you look at the magnitude, right, of the last 3 times since year 2000, the magnitude is about 5%. Yes, it's about 5%. So I can safely say that if let's say history repeats, right, then it is possible that we could see that the S&P 500, the S&P may be dropped down by 5% from the high. So guys, do the maths and tell me, right, 5% from the high is how much is that? That means you take the S&P high and you multiply by 0.95, what will be the answer for that itself? Can you tell me? Anybody can tell me? All right, if you take S&P high and you multiply by 0.95, what number do you get? Anybody? Right, seems like no one doing the numbers or waiting for me to do the numbers. Thank you, Anna. All right, thank you, Anna. Thank you, Philip. 37.66, correct. 37.66. All right, so the S&P now is at 38, 30 or 40 level, right? So it's still a distance. So if the market do come down, 37.66 will be a good level for you to look into, consider to look at the S&P for the temporary rebound there. Okay, right, that's one more. Okay, now this is something scary. I hope that it will never happen, but this is someone put onto the forum. Apparently, it's all right. He basically put these two charts, the 1929 chart and the year 2020 chart together. And this is something quite crazy. All right, there is some form of resemblance, but not really must happen like that. Some form of resemblance. So traders, you look at it itself, right? If you believe that history repeat itself, then probably this is like telling you what you can do with the market. So you can take I'll send you this screenshot later on to the group chat, not to worry. But this is something incredible. I just happen to see online that I just share with you. So if really things happen for a reason, then things can go pretty scary for this year. And then after that, you have a very strong recovery, right? And enjoy the next few years based on what I'm saying right now. All right, the last one will be the greed fear index. You can see the previous day itself was at 58. Then after the Dow go to all-time high, went to 57. And yesterday it smashed down to neutral ground. So now the market is don't know what to do already. So if later on, if things really do come down quite a fair bit, and if the indicator go to the extreme fear level, that is where you know that it's time to be more towards the buyer side, right? Whenever the signal call for it. Okay, that will be all for today's sharing. I hope you enjoyed this session. Once again, I apologize for this morning late coming on board because I was really very busy. So guys, I hope that you guys appreciate me. Tomorrow's my preview. Please bring your friends down. This is something I really want. And I hope you guys will do much better today and the next week. All right, guys, have a great day. Bye-bye.